webinar with us from Group Futures. Today, our topic of discussion is ICE Singapore Mini US Dollar Index Futures. Are you trading smart? And to give us a better understanding of what the dollar index or DXY as it's more popularly known, how traders seize opportunities derived from the impact of the dollar on many, many other markets. Our speaker, who is Jose Blasco, principal of Predictive.com, I hope I got that right, will give us tips on risk management techniques and what is smart trading, and how does the mini US dollar index make it easy for investors to trade smart. Jose will also walk us through some real examples of smart trading in action and give you some real-time identification of opportunities. So you are all set up for a wonderful webinar, a great opportunity to gain key insights from our speaker, who is a multi-asset trader specializing in many, many different products, including options, equities, futures, and currencies. He began trading in 2008, and he accumulated a wealth of knowledge on the global markets. He trades bi-directional and multiple timeframes as well. In 2011, he began sharing his expertise as a trading instructor, delivering training in person as well as online. Very important for the situation that we are all in right now, and appearing on live broadcast events. Since 2018 rather, Jose has developed innovative trading technology as a principal of Predictive Private Limited, where he mentors traders worldwide. And to give you more insights we'll probably give you more insights and let Jose tell you more about himself a little bit later. First up, as this is a joint webinar with ICE Singapore, we will have Ian Xia to walk us through the offerings of ICE Singapore, as well as share a little bit more about the exchange. Ian, if you're all set, I'm going to give you sharing access right now. You should see a prompt on your screen.
Thank you, Sri, for the kind introduction. Good evening, everyone. Welcome to this webinar. It's one of the first webinars of a quarterly webinars that we are doing with Phillip Futures, and the first one is on the mini USDX contracts that we have on ICE Futures Singapore. So on my part, I'm really is to introduce you to ICE as a group and what is ICE Futures Singapore about. The US dollar index, a bit of the history, how it came about, and lastly, just the contract specs and some of the resource that we have on ICE Futures Singapore's website. So very quickly, a quick introduction of ICE Group as itself. So ICE Group as itself is listed on NYSE. We actually manages and operate 10 exchanges in the world. There are several global benchmark products, as you can see on the slides. So we have 2/3 of the world's crude trade and refined oil futures contract that's traded on our ICE Futures Europe. As well as you see the NYSE logo, that's also part of the ICE Group. We also on the ICE Futures US, we have a lot of the benchmark products for the soft commodities, things like coffee, cocoa, sugar, and also as well as our equity indices. If you're familiar with our micro NYSE FANG Plus Index Futures. So ICE Group at itself, we have a big group of exchanges, and ICE Futures Singapore is one of the exchanges under the ICE Group. So ICE Futures Singapore has been operating in Singapore since 2015. So we are regulated and approved by MAS. The selling point for why we created ICE Futures Singapore is really to tap in, to tailor for traders in the Asian hours. So we built ICE Futures Singapore for Asian clients to offer our benchmark products that has been offered in ICE US and ICE Europe. The features are they are all mostly cash settled. They are all cash settled. They are mini contracts, meaning for the participants a very low initial margin, and you can can start trading. And it's in Asian time zone, so its activities are all the volumes are all in the Asian time zone. Just a quick introduction to ICE futures in terms of products and volumes. We have three categories of product suites that we have. We have a digital asset, a Bitcoin cash settled monthly futures contract that is 1 Bitcoin in size. We have the FX products, and of course today's focus is the mini US dollar index and 10 pairs of the other Asian currency pairs. As well as energy contracts, we have the mini Brent, 100 barrels. We have the mini WTI crude, as well as the mini low sulfur gas oil. So our top 5 products on ICE Futures Singapore is, of course, our mini US dollar index. We get about 1,300 over trades a day. Of course, our Bitcoin, which is very popular right now, we are looking at about over 1,000 contracts a day, as well as our dollar Sing contract, futures contract, FX futures contract, our dollar CNH futures contract, also very popular on our ICE Futures Singapore. My next slide is really to talk about the history and how the formation of the US dollar index, what it is. So the US dollar index is the measure of the US dollar relative to a basket of 6 foreign currencies. So which are the 6 foreign currencies? The biggest being the euros at 57%. Second, the Japanese yen over 13.6% at 13.6%, followed by the British pound at 11.9%, the Canadian dollar at about 9%, and followed by the Swedish krona and the Swiss franc. So the US dollar index was actually created in 1973 by the US Federal Reserve. ICE US has been compiles and maintains and determines the weights of the components of the US dollar index since 1985. So the US dollar index futures contract is a benchmark for the international value of the US dollar. So it's a highly recognized traded currency index. The US dollar index enables market participants to monitor the strength and the weaknesses of the value of the US dollars relative to a basket of these 6 world currencies. So it's also a good index to hedge your portfolio against the risk of a move in the US dollars. And on our ICE Singapore, this is our mini US dollar index futures contract. It is 1/5 the size of the regular US dollar index in our sister exchange, ICE US. So the contract size, the contract multiplier is 200 times the index value. So at the current index levels at about 91.5, the full index value, the contract value is about 18,000 US dollars. The minimum, the tick size is 0.005, so that's 1 US dollar per tick size. And like I mentioned, that our mini futures contracts are very retail friendly. So at the initial margin is to initiate 1 futures contract is at 380 US dollars. And how about trading hours? Like I say, so this is in Singapore time. So the trading hours goes from our morning 8 a.m. all the way to 6 a.m. The next day. So majority of the volumes are in our Asian time zone. So if you want to take a view of the US dollar versus the other currency pairs, this is a great way you can do it. And lastly, on our website, www.dice.com futures-Singapore. We have several resources that we have currently. We do have market commentary, and we have a mini US dollar index, a commentary on our on the USDX report. This is on a monthly basis. It gives you some of the snippets about the markets or against the currencies, as well as the charts. So you can go in here. It's free of charge. You can subscribe to it, and you get an email from us every month. There are also other products like the Brent. You can get insights to the Brent, as well as our weekly Bitcoin market commentary. That's where it brings me to our speaker that's going to talk from the principal from predictive.com, because the Bitcoin market commentary is also written by our good friends from predictive.com. So that's the end for my part. I will hand over the reins to Jose.
All right, let me just give sharing access to Jose. Jose, you should see a prompt on your screen right now.
Yes, I am now turning on my screen. I believe you should be able to see my screen at the moment. It would be great to have a quick confirmation. This is the
yes, Jose, I see your screen. Dear members of the audience, at any point in time, if you have any question, just type them into the question box which you see somewhere at the bottom on your control panel for GoToWebinar. All right, at any point in time, if you have any questions, just type it in there, or if you want the speaker to cover a point once more, just type in your request, okay? And Jose, if you're all set, please go on ahead.
Thank you so much. Thank you very much, Ree, and also Ian. A pleasure to continue with the presentation, and welcome everyone. My pleasure to be conducting the session today and collaborating with special companies from an exchange point of view. The ICE, obviously a key exchange in the world, Phillip Future, major broker in Singapore. So definitely very excited to be with you all today. So let's talk about smart things, if that's okay. Today we're going to be talking about the US dollar index. As you know, the point of my presentation is about understanding how to approach trading such product. Why is that smart thing to do? Okay, why should we be exposed to such a powerful product in our trading, and how to do it from a trading point of view when it comes to what type of process, what type of steps. Let's talk about all of this. Okay, let me show you. I am highlighting, by the way, as well the disclaimer that we have on our page here on the upper left. I'll give you just a few seconds for you to be able to read it. It's just a couple of paragraphs. Obviously, financial disclaimers. Trading involves money, and there is financial risk. I believe we all understand that. With that said, the agenda that I have ready for you guys would first talk about a quick introduction. I want to appreciate very much, Ree, you introduced me very, very kindly and very, very well. Thank you for that. So I'll fly through the introduction, if that's okay. And then we will talk about what is smart trading, why the mini US dollar index allows for that smart approach to trading. That's going to be very interesting for you to understand. Then we look first at some examples. We learn through repetition. So I'll go through various examples to have the concepts I will be sharing with you to be well understood. And then we'll jump into real-time market opportunities as well. And later in the presentation, have a bonus for you, which I will be sharing, as well as I want to show additional educational resources that are very powerful and could be extremely good for you in your trading. And then we'll end up the session with questions and answers. So from an introduction point of view, as I said, my name is Jose Blasco. I trade all assets. And if you were to ask me what do I prefer to trade, well, the answer is derivatives, futures, options. Everything that trades in an exchange has definitely great benefits. So we'll talk about this throughout the presentation. Our company, Tradictive, utilizes a website that we call tradewithufos.com. And of course, UFOs is not what you're thinking of if it's the first time for you to meet us. As we go through the presentation, you will understand better what UFOs mean. In our case, I mean, I'll give you a little hint. It means on-field orders, which is obviously key for traders to plan the trades. If you want to know more about our website, you can just scan this QR code or just, you know, when you have a moment, take a look. Okay, the URL is on the screen. With that introduction done, let's begin with understanding what is smart trading. Well, smart trading is an acronym where the key letters represent simple, multi-currency, adaptable, relevant, and trend setter. And I need to go into each of them to explain better what it means. But if I was to really summarize it, and I was to ask the question, why is it smart to trade smart? The answer would be that often traders, and I guess it's part of being human, tend to overcomplicate what they do when trading, where we all know the power of a simplistic approach to doing things in life. If you do something simple, the probability of mistakes is less. The amount of time spent doing that thing is less. So again, overcomplicating really doesn't provide much benefits. And the beauty of utilizing a product that has multiple currencies built in, such as the mini US dollar index, certainly will provide this direct benefit and more, as we are about to discuss. But let's go one at a time. So smart as simple. A trader who wants to properly understand the currency markets needs to understand the US dollar. Why? 80% of transactions worldwide are done in US dollars. So if you are trading the currency markets or any other product, because all products in the end, they are priced in a currency, you may be trading stocks in Singapore or stocks in the US, still they are priced in a currency, right? So the idea is understanding the US dollar will give you an edge when trading. And Ian introduced us to the DXY, the DXY, which is the dollar index itself. So one way to be exposed to the index, which by definition an index is not a tradable instrument, but if you take the index and you make it a futures contract, now it becomes a tradable instrument. And the mini US dollar index that trades in the ICE Singapore Exchange, it's the one that we are discussing today, which would allow you to understand the currencies, which would help all your trading and would help you to have a simple approach to currency trading. By doing one trade, if you wish, you would be exposed to multiple currencies. So that's powerful. Smart as multi-currency, because in the end, most of the currencies that trade in the world, they trade in pairs. So the euro trades against the US dollar, for example. The Great British Pound trades against the US dollar. So strengthening or weakening US dollar would definitely have an impact on any other currency. It is common that sometimes currency traders get in trouble in a trade. They get stopped out, they take a loss. Not a big deal, it's part of the game. But then they take a look at the dollar and they realize, hey, wait a minute, the dollar index was in that position. I should have never taken this trade on, let's say, the pound. So again, trading the mini US dollar index is kind of like, you know, keeping you in tune with what's happening in the currency world, in the currency arena, which obviously could be used for you to trade and keep it very simple, as we already said. But also, if you want to be exposed to multiple trades in parallel, the mini US dollar index can certainly also help you to be, again, in tune and well updated with what's the market doing, and therefore what should you be doing. It's kind of like if you trade stocks in the US, for example, you need to know what the Dow Jones index is doing, for example, or the S&P. If you trade stocks in Singapore, you need to know what the STI is doing, right? So you need to understand the broad market in order to do your trades properly. Smart as adaptable, okay? Well, most significant changes of market conditions are often reflected on changes in the US dollar. I mean, just to throw, you know, while you are reading the slide, just to add an additional thought. If you think about currency markets in the world and you think about the fact that there is a pandemic in the world, it's very difficult to explain from a fundamental point of view why do markets keep going higher if the world is really suffering nowadays? And again, if you think about all the printing of US dollar that the Fed in the US has been doing, well, what is the printing of the US dollar doing? The printing is devaluating the currency, and if the currency devaluates, everything becomes more expensive because you need more of the same currency to buy that same stock. So what happens to the price of that stock? It goes up. Same could happen to the price of crude oil. Same could happen to other commodities such as gold or other currencies that trade against the US dollar. So again, it's key to understand the US dollar and again, to be in tune with it. Having those trades running in the account is what really keeps you in tune. S.M.A.R.T as relevant, just like most technical trading methodologies require to do multiple time frame analysis, right? Typically, traders who are technical, they will not load one chart and take the trade out of what they see on that one chart. They will typically go through 1, 2, 3, 4, whatever amount of time frames and do their multiple time frame analysis, right? So same idea with the mini US dollar index, okay? By you staying in tune with the mini US dollar index is kind of adding another angle of understanding of the broad markets for you to execute your trades, no matter what you trade, including the currency. And trendsetter, well, because for powerful trends to develop, okay, we are not talking about a little bounce that lasts 2-3 days. We're talking about like significant market movements. For those significant market movements to develop and last, okay, we need multiple forces pushing in the same direction. So again, understanding what the Dixie, the dollar index is doing, it's absolutely key. And one more time, I'll say it again, being in tune with the markets, the best way to be in tune with the markets is that you are executing trades, depending on your trading style. Maybe you trade intraday, maybe you're a swing trader, but you are in tune with those markets because you have a commitment, if you wish, that you plan trades every now and then, and you execute those trades, and you watch those trades, and you manage those trades. So that really gives you that awareness of understanding what the market is doing because you are actually involved, okay? Very, very important, okay? So to kind of summarize, why is it important to be exposed to the mini US dollar index? Well, if you allow me to use a little bit of humor, I think it's a smart thing to do. I think now it's okay for me to say that because now you understand what I mean. We speak the same language, if you wish, when we use the acronym S.M.A.R.T. Okay, it's a smart thing to do to utilize that product. On top of that, we are not talking about some unregulated product that trades in a, let's say, a weird jurisdiction. We are talking about a product that trades in a regulated exchange, approved by the MAS. On top of that, the mini contract, because it's a mini version of the contract, offers great level of flexibility. Not only you need a very small margin, we talked about $380 per contract, but the beauty is that now, instead of taking a trade with one contract, maybe you take a trade with, let's say, 4 contracts. And now what happens is that you could set multiple targets in your trade where, when you get to this point, you take a few contracts off and then you continue riding the move with, let's say, half of the position, for example. And the fact that the contract is mini allows you to such advanced trade management techniques instead of using a large contract that forces you to be with maybe one contract only. Again, that would depend, of course, on your risk management rules, as well as the size of your trading accounts, and if you're experienced or you're new, etc. Okay. Well, and on top of that, I mean, the mini US dollar index, it's actually the neatest of all derivatives because it's a derivative of a product created and maintained by ICE, which is the Dixie. Okay, the dollar index itself was created by ICE. So again, all of this, it's extremely relevant, as you could understand, I believe. Feel free to type any question. I'll be keeping an eye on the chat box, even though most of the questions will be at the end. But if if there is anything, any concern, any comment, any question, please go ahead and feel free to type. Okay. Cool. Okay. So now that we are understanding the product and the reason, I would like to talk about how to trade it. Okay. And now this is when the session, I would say, is gonna become a bit more exciting, because I am about to jump into charts and start looking at opportunities, ways to approach trading. So probably it's a bit more fun than going through descriptions, even though we need to know what we have in our hands. Okay, so I wanted to start the session with those, let's call it, definitions. So how can you trade the dollar index? Well, I'm going to give you two choices, and I'm going to point at my favorite choice. Okay, so the two choices is go ahead and load a chart with SDX. Okay, SDX is the trading symbol, is the ticker symbol for the mini US dollar index that trades in the ICE Singapore exchange. So when you load that chart, you get the product itself and you can plan your trades. Maybe you are a technical analyst, your trading style involves using moving averages and a Bollinger Band. Maybe you are using Fibonacci's and you draw classical support and resistance lines on your charts. Maybe you do trend lines, maybe you trade breakouts. Again, the sky is the limit. So you would apply your trading methodology to SDX, which is the product itself. That is certainly a valid way on how to do it. Another way on how to do it, which I personally prefer, would be to load the index itself, which is DXY. This is the Dixie. Remember, the index, it's not a tradable instrument, but it's chartable. And the futures contract derives its value from the index. So I would prefer, and this is what I will demonstrate, I would prefer to load a chart with the Dixie, apply my trading methodology, which I'm going to highlight in a minute, and then go ahead and turn around. And when it's time to place an order, then use the ticker symbol SDX. So my trades are executed in the ICE Singapore exchange using the mini contract that we are discussing today. Some price adjustments may need to be done because the futures product always varies a little bit, a few ticks up or down versus the price of the index, because it's a derivative contract, obviously. But again, it's a minor thing, and you could just right before placing the order, you can adjust that and then place the order. Okay, so it's quite simple. So how would I approach a trade on the Dixie? So I'm gonna summarize it on 6 steps, and this is the last slide I'm gonna share with you with writing. Starting from now, we're gonna jump into the charts. So step 1 would be to load the DXY symbol on the chart. Step 2, depending on your trading style, decide the time frames that you use. Maybe you are very short-term trader and you use the 15-minute time frame and the 5-minute time frame. Maybe you're a swing trader and you use the daily and the 60. Maybe you are somewhere in between. Again, that would depend on your trading style. At the end of the presentation, I will talk about education resources as well, because some of you may be in learning stages or may know how to trade other products, but you never traded futures before. So I will show you how you can get access to proper training to do this right and be able to have answers to all these questions. Okay, right now my statement here kind of assumes that you are already trading or you know some trading methodology, even though I'm gonna go back to square one, and when I get into the charts, I'm going to explain that in a very simplistic fashion, so everybody understand, even if you are not trading yet. Okay, so the first thing you would do is switch to the right time frame, switch to the right time frame based on your trading plan, and there you would assess what we call the market climate. Okay, the market climate basically is looking into, is it time to trade, yes or no? Is it sunny or rainy, right? And if it's time to trade, should I go long or should I go short? Okay, this is the first question you need to answer before you trade, which I'm going to show you in a second how I do it. Once you know it's time to trade and you know it's time to be a buyer or it's time to be a seller of dollar index, you would then switch, step 3, to a lower time frame to identify your entries and exits. Which is the price at which I buy, which is the price at which I sell, in case I'm right. But what about in case I'm wrong and the market goes against me? So what is the price at which I sell and get out of a trade for a small loss. Okay, we're gonna do that using those UFOs, which I'm about to illustrate on the charts. UFOs, that stands for on-field orders to buy, on-field orders to sell, which would be a powerful thing to plan our entries as well as the exits. The moment we have the trade plan, we will not accept it immediately. We will then, step 4, go ahead and compare the reward to the risk. And assuming the reward compared to the risk is acceptable, then we will take the trade. Let's say you were to risk, I don't know, $75 in order to make $10. Probably you would think, why would I even take this trade? It's not worth it. I'm risking too much in exchange to make too little. So then you would just go ahead and discard it. That would be step 4. Step 5, you would now go ahead and calculate the right size. How many contracts, how many mini contracts you would need to take the trade? Could be 1, could be 5, could be 10. You would decide that based on your risk profile, your account size, and so on. And then finally, now you are in the trade, and now trade management rules apply, which is what happens during the life of the trade. Okay, so this is kind of what I do in a nutshell, which if you are already trading, it's probably quite common sense, if you wish. If you have never traded before, it may be a bit overwhelming, but let me give you multiple examples, and we learn through repetition, so you're gonna see that I believe that 1 or 2 examples after is gonna be crystal clear for everyone. So let's begin with example number 1. How would I do steps 1 and 2? Well, take a look. I have loaded a chart with the symbol DXY. So I am charting the dollar index, and I am using a daily time frame. Okay, that was the selection for that particular example. And what am I doing there? Remember, we need to assess if it's time to trade or not. And if so, should I be a buyer or should I be a seller? That was step 2. So I do that using AutoClimate, which is a tool that we have built in our company. Again, for the ones of you that are currently trading, you could do that with any other tool. Maybe you're using trends, maybe you're looking at lower highs and lower lows, maybe you're looking at higher highs and higher lows, maybe you're looking at moving averages, or any other combination of tools and techniques to understand the market condition. Okay, the way I do it is I use AutoClimate. It's super objective, it takes no time. Notice how here we got a thick blue dot. So what does it mean? Thick means confirm. So the climate is confirmed, and because it's blue, it means it's time to be a buyer, and that gives me a statistical advantage. So at this moment in time, and by the way, this was yesterday, at this moment in time, I would know it's time to be a buyer of the dollar index. So what would I do now? Well, I would move to a lower time frame. This is step 3, if you recall. In this case, I am using a 60-minute time frame. And now I am using another tool, which is Auto UFOs. Okay, you can see it here if I zoom in. So we got a tool running here called Auto UFOs. And what are the UFOs? They are those flying saucers. Okay, those flying saucers, if they are red, they represent piles of on-field orders to sell. If they are green, they represent piles of on-field orders to buy waiting to be filled. So those are going to be very useful to set our entries and exits, knowing that it's time to be a buyer, as we concluded when we did step 2. So what do I do now that I know this? Well, I do my step 3, 4, 5, which I'm going to do everything on the 1-hour time frame chart, right? And basically, take a look. We have, this is the same chart as before. We have a UFO right there, buy on field orders. So this is where I want to buy. So the dollar index is currently trading in, when we took the screenshot, dollar index was trading at 90.8333. So you would want to wait for price to come down. And the moment price comes down, you will want to be a buyer right there, expecting the dollar index to continue moving higher. Why? Because the climate was blue. We are in an up market, so you expect it to continue moving higher. You just want to buy at the same price where on-field orders to buy are waiting to be filled, right? So in this case, okay, I mean, the gray box kind of covers it, but the entry price would be here. It's 90.815. that would be the entry price. In case we're wrong, because of course I told you we are waiting for price to come to the UFO, and then you expect it to go higher. But what if instead of going higher, something happens and the dollar index keeps falling? Well, you don't want to expose yourself to such a loss. So we're gonna set right below the UFO a stop loss order located at 90.685. So if we are wrong on the trade, and this happens, the risk of the trade with one contract would be $26, which basically is the difference between 81.5 to 68.5 times the tick value, which you may recall it was $200 per point, as we mentioned at the beginning of the presentation with Ian. So for such a move, it would be $26 per contract. That would be the risk of the trade if you were to be stopped out. Now, what if the trade works well? Well, then we would want to set a target using not the first, but the second UFO, okay? And why is that? Why not the first one? Well, you could certainly use the first one if you are more conservative, but didn't we say the climate is blue? So the market is more likely going to move higher than move lower. So then the expectation would be that price would come to the green UFO, bounce, and when it gets to the red, maybe do something like that, and of course react to the sell orders, but finally continue and get all the way to our final target. So instead of capping our profits to this price level, we would set our profits, our target, to be located at 91.155, which in this case would imply $68 of profit per contract. Again, if you do 10, is $680. That the size would depend. Everybody will be different. I will keep the math to 1, so it's good for everyone if you wish. So if you were to take this trade, the risk versus reward would be 2.62 to 1. So it's pretty nice. So this trade would be accepted, and therefore you could have taken the trade. If you did, your purchase price would have been here when the dollar index came back down. Okay, that would be this one, came back down, right? And then it went up, it did something like that here, and then went up. Okay, so it went up, it did that thing here, and then finally went to the target. Okay, so it's kind of what I just explained on the left, and then you would be out of this trade for such a profit. Okay, and very simplistically, those are my 6 steps. Okay, so load the dollar index. Number 2, look at what the climate is suggesting to do. Is it time to trade, yes or no? If so, should I be a buyer or should I be a seller? And once I know it's time to be a buyer, look at my on-field orders to know the price at which I want to buy as an entry and the price where I want to sell, in case I'm right and I hit my target, but also in case I'm wrong and I need to be stopped out to exit for the minimum losses possible in a smart way. Example number 2, we learn through repetition. So what if you miss this trade? Okay, so let's say you know, you went to the gym in the morning, and when you go back home, this trade has already happened. You load the chart, and the chart, you know, in the daily time frame still shows you that the climate is telling you to buy. So it's still the same day, just happened to be a few hours later after you came back from the gym, and the climate is still telling you it's time to buy. But then when you load the intraday time frame, of course, it looks different. Okay, the prior trade was taken down here, but currently now the dollar index already went up and is right here, right? So what would you do? Well, you would do the same thing, but instead of looking at the prior UFO we had located lower in price, you would do it with the new UFO that is now right in front of you. I mean, that's assuming you use UFOs. Again, same concept apply no matter the technique that you use. Maybe again you trade Fibonacci's, and let's say you have a Fibonacci retracement line there, or maybe you do support and resistance, and you have a pivot high here, so that allowed you to draw a line there, and when price came back, you want to buy at support. You know, again, you know, there are millions of ways on how to trade. I'm just sharing with you what I do. So how would you plan the trade? How would I plan the trade? Same as before. So step 3 and 4. I would go ahead and look at my 60-minute time frame in this case, and again use that UFO 90.003. Notice I run it up to 0.005 because the mini dollar index trades in multiples of 0.5, so it cannot be 0.3. That is the index, but the futures is 0.5, so I rounded it. And then the stop, same for the stop, I put it right below 92.9. I put it at 92.5. So that would be your entry. So you are expecting, like before, price to come to the UFO, and that's when you buy, and then you expect it to go higher and reach your target at 91.36. Of course, we may be wrong, and what happens is that it goes against us and falls. So if it falls, then right there at 92.5, we're going to use a stop order to exit the trade for a loss. How much that loss would be in this case? $16 per contract. Okay, that UFO is narrower. Okay, because it's narrower, the risk per contract is less, which allows you, by the way, to use more contracts in the trade. Okay, it's nice. We like very much when the UFOs are narrow. Of course, we don't have the power to decide where the UFOs are. The technology does that, and the technology adapts to the marketplace. So again, the orders are in the market at whatever price levels, and the technology basically plots where the orders are. We have no control over that. But when the UFO is wide, you could manage your risk by using less contract. And when the UFOs are narrow, you could manage your risk by using more contracts and expose yourself to the trades, always with the same risk approach. In this case, to keep it simple for everyone, I'm just using one contract at a time, just so the math is clear for everyone. And notice that with one contract, the risk would be $16. What if you were to be right and it went all the way to 91.36? Well, in this case, the reward would be $71, and that would be a 4.41 trade. Okay, so you came back from the gym, you took the other trade, and if you did that, that would be your entry price. Okay, so this is when the market came back down. Okay, this is where you would buy. Okay, and then it went straight up into your target, and that would be your $71 profit. You know, each candle is 1 hour, so that would be a few hours of time. Okay, that would be like half of a day, something like that, a bit less, maybe 8 hours, something like that. Again, if you use 10 contracts, that would be 710, right? If you use 5, half of that. If you use 20, double that. Okay, and that's it. Okay, and again, we learn through repetition. So let's go through another example. So what if you came back again from the gym, okay, or you went for lunch and then you came back, and same day, same climate, time to be a buyer, you load the chart, and what happens? Now the UFOs are in a different place on the chart. Why? Because it's a different time during the day. So what would you do? Same story. We are mechanical, right? We always repeat the same process. So you would plan your entry in that UFO, the stop below in case you're wrong, the target above in case you're right. Okay, so that would be $13 of risk in case you're wrong, $65 of reward in case you're right. That's a 5-to-1. Okay, and by the way, if you took this trade, this one didn't work, and it moved against you, and it stopped you out. Okay, which is part of the game too. Okay, but again, not a bad one. That what you lost is a fifth of what you could have made, and as long as you have taken 1 or 2 more trades like the ones I showed you before, definitely you end up the day as a happy trader, isn't it? So again, this is the process that I follow when I trade. Again, I'm really summarizing things since we have limited time in the presentation. I am very happy to send you a copy of the slides, either directly through me if you want to send me an email, or through Phillip Futures as well. Delighted to be in touch in any way. It's better for you guys. If you want a copy of this to review, to restudy it, and so on, definitely we can send that to you. Since again, I am aware that it's not like I'm rushing through the materials, but I am trying to be agile and efficient with the time. So hopefully this is not too fast for you. And if it is, we are gonna do Q&A now. Feel free to ask, and I'm happy to repeat anything you need me to repeat, okay? Good, so now I said at the beginning of the presentation that there is a series of bonus resources as well as educational materials that I would like to share with you guys. The first thing I would like to share is that on Monday, 22nd, that's 11 days from now, a week and a half from now, we're gonna be running a special 2-hour educational seminar where we're gonna be going over the very specifics of not only the mini dollar index in the ICE Singapore exchange, but other products that are very interesting as well, such as, let's say, for example, the black Bitcoin and such. So again, you are welcome to join. You can just, I would recommend you to do it now. Just grab your phone, just scan the QR code, and you just need to type your name and your email, and automatically you will be registered for the event. It's free of assistance. If you happen to be busy at that time, you'll receive the recording, but I would suggest that you register. That way, the recording will be sent to you, okay, automatically, even if you miss it. So that way, you have your materials, and as you start trading the products, you are well informed. You know, it's you know, you may be the best trader in the world, but if you don't know the specifics of the products, like for example, Ian shared that the mini dollar index closes from 6 a.m. to 8 a.m. Singapore time, the market is closed, you cannot trade that product. So you need to know that, right? So this is just a very simple example. You need to understand the products that you trade before you trade them, okay? So that day, we'll get into more of trading, more of the products, more of opening your eyes, practice time and such. And I will be delighted to have you. You know, my colleague, Andrew Han, would be with us as well that day. So it's gonna be a very dynamic webinar, and I will be very excited to see you again at that time. Apart from this, okay, and hopefully you had time to scan the code. Apart from this, we also have something very special to share with you, which is the fact that we as a company run a futures course, which is it's a very complete course. If I was to show you the page where you have more information about the course, it's a course with 129 lectures, it's 17 hours and 21 minutes duration. The course talks about, you know, trading expectations, technology, trading styles, entries, exits, climates, order flow, terminology, risk management, trading psychology, trade management, methodologies, all sorts of things. Okay, so you are welcome to come to our website and take a look by yourself. But what's really exciting as well about the course is the fact that the course is financially sponsored by ICE Futures Singapore. And that basically means that the tuition for the course, which on our website you will find it as $144, it's actually subsidized and is discounted by 50% thanks to ICE. So thank you very much for that. And therefore, the whole course, it's $72. Okay, so again, if you want to access the course, another QR code for you today, just scan it quickly. You will get into this page, tradewithyourforce.com/ICE. It looks like that. Okay, it looks like this. So here is your add to the basket button. Here you have all the definitions of the course as well, one more time, which again, you have more info on the other page that I showed earlier, but be careful here, because if you use the other page, you will be paying $144, okay? So for you to get the subsidized price for the course, make sure you use the right link, which again is tradewithufos.com/ICE, or just even easier, right now with your phone, you can just scan the code and you get it, okay? With all of this said, I would like to move into real-time charts, and from there we'll dive into questions. I am noticing as well the time. I spent a little bit extra time in the presentation. Something that happens when you are very passionate about a subject, time goes so fast. I'm sorry about that, but very quickly, I would like to look at a real-time chart before we get into questions, and certainly we can also deal with questions in an email format, so you can also email us, and every question will be answered, no worries about that, even though very quickly I would like to show you a real-time chart so you understand how to deal with the dollar index, okay? So let's go ahead and look at a different scenario. So on the left, I'm just gonna load a 4-hour time frame of the DXY, just to use a different time frame, okay? So I'm using the 4-hour time frame, and you can see very quick, the climate is red. So hey, time to be a seller, right? And then on the right, so what I'm gonna do is I'm gonna load a 15-minute time frame of the dollar index. And what do I see? Well, I see a red UFO right there. So what could I do? I could wait for the dollar index to come to this UFO and then take a trade to the short side, expecting the market to fall. Let me shrink this a little bit and move it up, okay? So notice that my green UFOs are below. So if I was to do some typing, oh, sorry for that, I just clicked on the wrong button. So if I was to do a little bit of typing, so my short entry would be located at 91.60. Okay, that would be the short entry, which is the bottom part of the UFO. My stop would be located above the UFO, which would be here. So stop loss would be 91.630, right? And then my target, okay, would be located using the rival, we call it the rival UFO, which is the green one, which would be 91.380, okay? So that would be the way you plan the trade. So basically, you are risking this amount in order to make this amount, which looks like a very powerful trade, by the way. But of course, not getting excited here. This is just trading. So we manage our emotions. We always use stops. And we never get excited about trades, even though we love it. We always, cool mindset. So we let our methodologies to do the trade instead of our emotions to dictate what we do, okay? Again, looking forward to spend so much more time with you guys on that 2-hour webinar, and looking forward to go through so many other setups and discuss all of this much more in depth. But I want to be respectful with the amount of time left in the session. I want to make a little bit of time as well for Q&A. So I believe this will be the time. So Shri, I would like to pass the microphone to you.
All right, Jose, we have 3 questions on hand. The first one is, how does trading the dollar index help if I'm trading stocks?
Very good question. So again, we talked about the relevance of the US dollar as a currency worldwide, where in the end, no matter what we trade, it's going to be priced in a currency. And most of the markets, even outside of the US, will be priced in a currency related to the US dollar. So again, understanding the US dollar, like for example, let's say you are in the trade I just discussed, right? And you are, in the trade and you are benefiting from the dollar falling, and you are in this trade. So what is likely to happen if the dollar falls? Well, if the dollar devaluates, odds are that other products will become more expensive because you need more of the dollar to buy that other product, such as a stock. So why would you do if you were to trade stocks? Well, probably that day you would be thinking of buying stocks. You would not be thinking of selling stocks. So again, trading the mini US dollar index would help you to trade stocks better from that angle. Okay, that would be my answer to this question.
All right, the next question is, Jose, would you be able to tell us if there's any correlation in general with the US dollar index and everybody's favorite cryptocurrency, the Bitcoin?
Yes and no. First of all, the Bitcoin is a very young market, right? And therefore, when you look at statistical information related to what's happening with the Bitcoin, you get to see that things change as time passes. So there are times where indeed there are very powerful correlations, and there are times where there is no such a correlation. Okay, so again, my approach to trading, and this is just a personal thing, but certainly I will recommend everybody to experience it, so you can feel it by yourself and for yourself. My experience would be that the best way to understand correlations between two assets, and in this case apply to the Bitcoin, even though what I'm about to say applies to everything really, the best way is that you are trading both of the products, even if it's only one contract. Like for example, so you are short one contract of the mini US dollar index, and you are trading one contract of the mini backed Bitcoin futures that also trades nice. So if you were to be in a trade with both of those markets, putting on the side that both may profit, both may lose, one may profit and the other one may lose, okay, which is when you have correlations or when you don't have correlations, or when the correlations are inverted, correct? Putting on the side the results, the fact that you're in a trade, even if it's one tiny contract, that would give you such a level of awareness, which is way beyond if you were to just look at the chart and you look at the chart and you do your analysis. But when you look at the chart and you do your analysis, the way on how we kind of digest the information is much less powerful compared to if you were to be on a trade in such product, and therefore you would have a true understanding, and you would have, well digested the reality of what's happening in the now. So at least that's how I think and breathe trading. So in order to understand, long story short, in order to understand, or maybe long story long, in order to understand the correlations of the US dollar with the Bitcoin, especially given the fact that it's a new product. I mean, it's been trading for a while and it's very stable and everything else, but really it's not like gold or the Brent oil, right? Which are very old markets. So the best way to understand such correlations is to be exposed, even if it's a very small size. So now you are in tune with the markets, and that will help you to have better decisions in other trades that you may have in your portfolio, which I definitely recommend you to also run other trades for diversification purposes.
All right, Jose, the next question is the $1 million question from Lily. What's the percentage of success and failure using this trading methodology?
Okay, very good. It depends. And it depends, and let me explain what that means, because really that's a very subjective answer. So if I was to throw out there a figure just to have a reference point, I would say, let's call it 65%. Okay, but now let me explain what that figure means, because that to everyone may mean something different. Okay, and we also know that as traders, it's not only about how often you're right versus how often you're wrong that sets results. You may be right 30% of the times only in your trades, but when you're right, you profit very, very nice, and when you're wrong, you lose very, very tiny, and you are still a very good trader, even though you only profit 30% of the times. Other traders may profit 80% of the times, but when the profit is very small and when the lose is humongous, and then they actually lose money, even though they are right 80% of the times. Okay, so again, I want to start with 65% as a reference point, and I will explain what that means, and you will then understand why I said it depends. So if you were to look at the stats, and we could discuss that more in depth in the webinar on the 22nd, okay, because that would take a bit too much time for today. So I'll be happy to elaborate more on that if you guys don't mind. But if you were to look at statistics on how often price come to a UFO and gets to the next one versus how often price comes to the other UFO and bounces and comes to the opposing one, right? If you were to look at those stats, as an average, is 65%. Now, it depends on the time frames. For example, if instead of a 15-minute time frame, I use 2 minutes, so what happens? Those UFOs are going to be nearer. Why? Because it's a lower time frame. If I use a weekly time frame, for example, let me reset the scale. So if I use a weekly time frame, those UFOs are going to be further away because it's a weekly time frame. So in other words, the higher the time frame, the less the probability. The lower the time frame, the greater the probability. Just because of common sense, it is more likely to reach a near target versus reaching a further away target because you need more time. And the longer you are exposed to your trades, the more craziness could happen in the world, some unemployment numbers, some news related to COVID that may totally change the market and hurt your trades. So again, as a reference, I will throw out there 65%, but again, this is to be discussed more in depth. And as I said before, putting on the side the fact that depending on your position size, where is your stop, where is your target, all of those things would impact trade results. So I'm just talking about how often you get the bounces, and your money results, your monetary result of the trade will depend on many other parameters such as position size, etc., etc. Okay, so hopefully this opens your eyes, even though of course to have a proper conversation about performance, I will need more time.
All right, Jose, I'm just going to let you go for a bit. Next question is probably better addressed by Ian. Ian, if you're still with us, the question from Ramesh is, what's the liquidity like on the mini Dixie contract And does ICE have a pool of market makers? Because Ramesh is wondering, based on his experience, he felt that some of the volumes of major contracts appear to be a little thin. So would you be able to address this, Ian?
Sure. Just for our mini US dollar index, so every day our daily average volume is about 1,300 contracts. And to address liquidity, we do have a pool of market makers as well as liquidity providers that are in the contracts itself. So entry and exit shouldn't be an issue at this current moment. And I just checked, and yes, prices are there at 8 o'clock in the evening. So you definitely shouldn't have an issue on trading this product.
Ian, just to wrap up your key point there, can I just have you just give us a few of the highly liquid contracts that customers can check out and look for opportunities in trading?
Sure. So our top 5 products, of course, besides the mini US dollar index, we also have the back Bitcoin contract. That is a cash settled futures contract, and with Bitcoin being such a focus of interest at this current period of time, we're looking at about over 1,000 contracts a day, and another two of the other fairly liquid FX futures contract is the mini US dollar SING, which is about 2,600 contracts a day, and the US dollar CNH contract, which is about 2,600 contracts a day. So all those are fairly liquid contracts on a daily basis. It's really for the Asian time zone, so you definitely, if you are trading, you don't have to wait until the US or European hours. You can actually start trading on ICE Futures Singapore.
All right, thank you so much, Ian. Our next question is from a gentleman called Lai Hawk. His question is, Jose, this is for you actually. The question is, what is this auto climate that you are showing? What is the algorithm behind it, and how can we have access to it?
Good. Yes, very simple. So to have access to it, you would like to just go to tradewithufos.com, and you will see there is a section with apps, and you will be able to see the various collection of apps that we have available. And one of them is AutoClimate, so you can just click and subscribe. AutoClimate actually happens to be free, so you can just get it. What is it doing in the background, behind the scenes? So AutoClimate is basically looking at 3 major market characteristics. One of them has to do with market trends. So it's looking at the directional component of the move, which is currently happening. The second component is looking at sustainability metrics. So while you may have a trending market, and maybe that trend has been developing, let's say, too far or too fast, or both, too far and too fast, and therefore is not sustainable. So AutoClimate is measuring that too, and therefore would help you understand if it's still good time for you to enter, or you better wait until a change of climate because you are late to the party. Okay, so that would be the second metric. And the third metric that is being processed behind the scenes by AutoClimate has to do with volatility, meaning that it's helping you to trade markets where the volatility of such markets is in, let's call it, in a good place. You know, as traders, we welcome volatility. We don't like to trade markets that are too quiet, because it takes an eternity to get to our targets, and we profit very slowly, right? So, I mean, maybe as a learning tool when you are brand new, could be okay, maybe to trade such as a slow market, but normally we welcome, you know, a healthy speed of price movement. So AutoClimate is looking at those 3 variables and basically summarizing everything with a very simple blue or red indication that tells you go or no go. It's kind of very simple, while it's very powerful. And I would say, even more importantly, it keeps you out of trouble. I guess that you would agree with me, for the ones of you that have traded before that sometimes, and I think this happens to everyone because we are human, sometimes, if you were just to not to take some of the trades that you took, and you had a tool that stopped you from taking some trades that were not a good idea, so that would have saved a lot of trouble. So again, that's why in the methodology I presented today, the first thing I do is to look at the climate. I don't plan the trade and then look to see if it's okay for me to trade. I look if the climate is prone and favorable for me to take a trade, and then plan the trade, so I don't develop emotional attachment to the trade unless I have the green light. So hopefully
All
this
right,
answers
thank
the
you
question.
so much, Jose. Thank you so
Thank
much,
you.
Ian. Well, we have come to the end of the segment today. Before we leave, I just want to let our wonderful audience know that if you like to gain access to ICE products as well as trade the mini Dixie, Phillip Futures can hook you up, and you get to enjoy. I mean, well, for the attendees, I've been told we have one of the product account managers here in the webinar. I've been told that we have a special promotion for the attendees. So if you like to trade the mini Dixie, you get to enjoy a very special rate when you trade with Phillip Futures. And once again, thank you so much for being a wonderful audience. If you have any questions with regards to getting started, or how you can gain access to ICE products, or how you can request a platform demo, just send your questions to us via the survey form right at the end of this webinar. And once again, thank you to Ian and thank you to Jose for a wonderful, wonderful session.
Thank you so much, everyone.
Thank you so much.
All right, good night, everybody. Take care.